watching Businessworld Live. I'm Danny Laurel. It's the start of a new trading day. Let's kick off with our banner story. The economy shrank at a softer pace in the first quarter than was initially reported. Now, data from the Philippine Statistics Authority showed that the GDP in the first 3 months of the year slumped by 3.9%. That is slower than the 4.2% contraction which was reported by the agency in May. This revision was issued ahead of the second quarter GDP print, which will come out at 10 a.m. today. The PSA noted that the slower decline in the first quarter was due to milder contraction in a few sectors, including services, real estate, and wholesale and retail trade. Meanwhile, the country's agricultural output contracted by 1.5% in the second quarter on the back of a slump in livestock and fisheries production. However, the second quarter drop is a slight improvement from the 3.4% decline recorded in the first quarter of the year. DA Secretary William Dar said the second quarter output shows a resilient agriculture sector despite the pandemic and the African swine fever outbreak. But the Pork Producers Federation of the Philippines believes hog production is expected to drop until early 2022. Now, the DILG is requesting supplemental cash aid funds worth 278 million pesos. That's on top of the 10.8 billion pesos that will be given to eligible people this week. Metro Manila mayors early reported that the distribution of ayuda to affected residents will start tomorrow. But President Duterte in his public address last night reassigned the task of aid distribution to the DSWD and the DILG. In this address, Duterte urged all unvaccinated people to just stay at home. The president said no one should go out until they have received their anti-COVID shots, but recall that health authorities said there should be no discrimination against those who are unvaccinated and that everyone should be treated equally. This means vaccinated or not, no one should be going out aside from authorized persons outside of residence and those going out to access essential services like food and medicine. Meanwhile, Metro Manila mayors passed a resolution prohibiting people to go out of their homes, even for exercise, during 2-week ECQ in NCR. Okay, guys, it's D-Day today. Net GDP going anywhere from 3 to 15%. Whatever number that does come out will still be subject to scrutiny. We are coming off, of course, a very low base here. How are investors positioning themselves ahead of this? You can see on my terminal here quite a slide that's down by 0.15%, but nevertheless, compared to what we were seeing, of course, in the past month, we are still nevertheless above the 6,200 levels that we had hit before. We are still above 6,624 levels here. Not to mention, though, that the issue here is whether or not we could sustain the rally that we've been seeing since the end of July. They do mention that we may be losing steam ahead, especially in August and September. They're saying that these are always the two worst months for local equities. If you take a look at the data, which was stretching back to 1987, the benchmark tumbled on average 3.4% in August, and also normally goes down at 1.5% in the past 34 years. So they do mention that entering this market this month may be rewarding, tend to outperform towards the end of the year. So a quick peek on our movers this morning. Here you can see on my terminal here, DMCI up by 4.7%. Followed by Pure Gold and Aboitiz Power. On the downside, you've got ICTSI slumping by 0.9%, followed by SM Prime and PPI. Incidentally, why DMCI is moving may of course be related to the fact that they have just reported their net income for the second quarter. That's to the tune of 5.2 billion pesos. That is versus the 1.4 billion pesos year on year that they had And get this, their first half net income was already 9.5%. And what they are saying is that this uptrend is due to a rebound, particularly of semi-rara mining and power DMC homes, and even their mining unit. They're saying that they are within striking distance to returning to their pre-pandemic annual income. That was 10.5 billion pesos. They're already at 9.5 billion pesos in the first half. And they said this according to their chairman and president, Isidro Consunji. They may even exceed that pre-pandemic level. Semirara in particular contributed 3.7 billion pesos. That's nearly a threefold increase from the 1.3 billion pesos. Here are the other headlines we're keeping our eyes on. The MVP group of companies is open to submitting a bid for Sangli Airport in Cavite. MVP Group Chairman Manny V. Pangilinan confirmed this in an interview with the Chiefs. Pangilinan said that Sangli would make for a good second runway to NAIA. However, Pangilinan explained that they are still assessing the robustness of international travel before making a decision.
Sangli is a good complement to NAIA because the runway is near enough NAIA, and the orientation of runway is similar to the orientation of the existing runway of NAIA. So it's a good second runway to Manila. And I think the investment to make a second runway in Sangli operable is much less than building a new airport. So that's why we're open to it. We probably will, if we take the plunge, it will be will have to be with half of our eyes closed.
Now, in that same interview, Pangilinan revealed that Metro Pacific has received an offer from an offshore corporation for a possible merger of tollway operations. The tycoon hinted that this could potentially create the largest tollway business in Southeast Asia. Now, Meralco is hiking power rates this month, so residential households consuming 200 kilowatt hours will see an increase of around 19 pesos in their electric bills in August. Meralco said the overall rate for August rose from last month's 8.91 peso per kilowatt hour to a little over 9 pesos per kilowatt hour, mainly due to higher transmission charges. Meanwhile, the Energy Department is still deliberating on the emergency supply procurement of up to 260 megawatts by Meralco. DOE Electric Power Industry Management Bureau Director Mario Marasigan said Meralco's request to extend its interim power supply agreement could not be granted by the agency. However, Marasigan said Meralco's request to be exempted from conducting a competitive selection process for the proposed supply agreement is still being deliberated. We are just a little over 20 minutes to what will be one of the most contentious numbers to come out. That is the second quarter GDP. We have with us Juneri, Chief Economist of BPI, to weigh in with his own expectations. Good morning, sir, and welcome to the broadcast.
Good morning, Danny, and good morning to your viewers.
Sir, I know you will be putting yourself on the spot here, but you do have to take into account that the projections are between 3% growth to 15% growth. The median estimate just above 10%. Tell us which side are you on in this fence, and give us the factors for your specific projection.
Yeah, well, if you saw the survey yesterday, you were right in the middle of it, Danny, at plus 10.6. By some coincidence, the figure we submitted is the median estimate. So if we fail on the downside, it's probably going to be because mobility, especially in Metro Manila in the second quarter, was actually slower versus the first quarter. No? And that, of course, affects the availability of non-essential economic activities, no? Especially in the restaurants and accommodation sector. No? But if the number is better than our projected 10.6% expansion, it's probably because of revenge building, Danny, which means that construction, which was delayed in March and early April because of the ECQ, may have kicked in strongly in late April, May, and maybe even June because the weather was pretty good last June.
Okay. Sir, can you talk about whether we see some gains in terms of consumption and spending? You did mention construction, but that could have just been a lag, effect of those that were not able to construct. But what about, the gains in terms of employment and that spilling over into the pockets of consumers, not just in the second quarter, but even your forecast moving forward?
Well, I'll mention two things, Danny. On the upside, regarding consumption, maybe the employment numbers, which are still far from pre-pandemic, but improved remarkably during the first during the first few prints of 2021, may have translated to an improvement in consumption, overall consumption. However, the downside there, Danny, is inflation. Inflation hit 4.7 at one point, still averaging about 4.4% for the first 7 months of the year. That has probably dampened consumption even more compared to pre-pandemic.
Okay. Sir, when we are looking at the Q1 revision, which the PSA just gave, so it's still a contraction,
Mm.
obviously, but less than what was previously reported. They did also mention specific sectors did not contract as badly as
Mhm.
they saw, like construction, real estate, for instance. Is this a good sign for you that even in our first quarter, we can actually still have some gains that might not have been taken into consideration and that might spill over in the second quarter figures?
Mhm. Well, I would have wanted a bigger upward revision, Danny, no, but I'll take it at
Okay.
minus 3.9. Um, well, that means to me the momentum that we lost wasn't as much as we originally anticipated, originally estimated. No? So that means that we entered the second quarter with a slightly better momentum than what the original picture painted at 4.2. So that means the chances of a print of 5% for the whole year has increased, say, from just a plus 4%. However, that doesn't factor
Mhm.
in the new ECQ, Danny.
Sir, on a sequential basis, of course, year on year, it's expected to grow because of a very low base year
Mhm.
we had. Do we have any gains? And will we be seeing that in the numbers from first quarter to second quarter? And can we say that
Mm.
there's going to be some sort of reversal trend when it comes to that? Because they were expecting that from the fourth quarter of 2020 versus the first quarter, and it does not
Mhm.
seem to have happened so far.
Well, typically the second quarter, Dan, is stronger than the first. Historically, or at least data from 2009 up to 2019 shows that there is a normal improvement in economic activity between 2Q and 1Q, and it's usually a double-digit improvement. No? So this plus 10.6 that we are projecting year over year actually translates to only a plus 7.6 sequential growth, which means that if you adjust for seasonalities, plus 10.6 is actually still quite weak. No? And we expect that because of the extension of the quarantines during the second quarter. If it hadn't been for that, we would have expected a double-digit improvement in 2Q versus 1Q.
Sir, we are, of course, in the thick of another lockdown in ECQ. How does this feed into your projection of full year? And is there a need for economic managers to revisit this 6 to 7% growth target?
Well, it will really help a lot if I have already seen the second quarter numbers, Danny. But
Yes, sir.
but assuming that we are on track with our plus 10.6 in the second quarter, we have had to revise our second half projections for this year because of the announcement 2 weeks ago. So instead of more than 5% growth for the whole year, we're now anticipating anywhere between 4 to 5, Danny, no? Because
Okay,
of
4 to
this
5%.
interruption, because of the interruption for the whole year of 2021. And that's about
Sir,
2 percentage points short of the government's forecast. No? That will imply about 6% growth for the second half, Danny.
sir, does this take into consideration fiscal stimulus that you're hoping to be provided for, and do we still have in our arsenal tools that will allow us to actually reach even this 5% target that you're giving, or the 6 to 7% of the government? Governor Diokno did mention they're unlikely to hike the rates, but on the other hand, you have rising inflation. But you've also got the triple R cut looming, but he did mention it's not useful at this point.
Yeah. Well, on the fiscal side, we're already seeing, I think, and we will probably see it in today's report, that election-related spending, public construction, will be contributing to those forecasts that I shared with you earlier. And if we fall short of 6%, it's probably just because of the ECQs. No? But you can really see the infrastructure numbers in the first half numbers, Danny, supporting the economy. It's really the private sector, because of the inability to reopen completely, that we're seeing a drag to growth. Yeah.
Sir, on that note, are you optimistic that the election year next year will help us, not just in terms of government spending, but consumption?
Well, most of the benefit will be felt this year, actually, Danny. For the early part of next year, we will still feel election spending, but because they have a ban, an early ban, um, history has shown that the second quarter tends to come out softer, because there's no longer, well, you're no longer allowed to campaign during that period. No? However, next year could be better if the vaccinations this year really ramp up. We've seen a remarkable improvement, commendable improvement in the pace of the vaccination, and it turns out that the access to the vaccines has really been the weakest link. No? So if we can bring the vaccination, especially to the elderly, um, to 30% before the end of the year, there's a big chance that the death rates in the Philippines will drop. This has been proven in many economies where when they reach the 30% level, the death rates substantially fell, even as infections continue to go up.
Sir, let's talk about the weakening peso and how this all feeds in to our risks. But on the other hand, economists have said that our low interest rate, combination of the low interest rate and the weak peso, might bode well for the sectors that do need foreign direct investments. Tell us how to manage that, and how we can assess the risks of of a weaker currency.
Well, I think the governor is not that worried about the dollar peso. I think the range of the DBCC forecast is up to 53. So, but of course, this will have knock-on effects on inflation. The last 12 to 18 months, we've been quite lucky that the peso's bias has been a strengthening versus the US dollar, and this has helped temper the inflation rates. But if you want to meet the full year target of 4 this year and next year, the weakening peso will be a challenge. Now, there are two ways for the BSP to manage this. First is they can sell dollars in the spot market to sort of smoothen the movements. Second is they can hike interest rates. I mean, it doesn't have to be a very meaningful hike that will hurt the economy. Besides the interest rates that we're seeing right now is at record lows.
Okay.
These are the two actions that they can take, but I think they will have to prefer at some point a rate hike, because if they run out of dollars, if they very quickly drain the GIR of the BSP, the rating agencies will see that. And one of the reasons why Moody's and S&P still give us a high ratings is because of our robust GIR. If that shrinks and they notice it, then these two rating
Okay.
agencies might reconsider.
Sir, on the back of that, just to close, you mentioned the ratings agencies. What are you expecting there in terms of real credit rating downgrades? For now, Outlook pa lang yung dina-downgrade.
Hmm.
What is going to keep us afloat, and what number of GDP are they going to be satisfied with, so to speak?
Yeah, you're right. It's very crucial how our growth numbers pan out, Danny, from today's report till the end of the year, because that's the denominator for your debt to GDP ratio. And last year, that was a huge disaster for us because we almost declined double digit. So with the denominator effect, so massive, there was no way to avoid a spike from a 39% debt to GDP ratio to 54. So if we can keep the growth at 5 to 6%, hopefully avoid 3, 2%, I think the rating agencies will be quite happy. But a negative outlook, we think, doesn't really affect the markets that much. You've seen it, Danny. It's already been almost 2 months since the decision of Fitch came out, and it hasn't had any meaningful impact in the markets. No? So not such a big worry for us, which is why maybe the national government shouldn't be too conscious about the ratings and focus
Okay.
more on the vaccination and the economy.
Focus on the real economy here. June Neri putting his projection, which is coming out in 10 minutes, just in the media, and 10.6% for the second quarter in terms of GDP growth. Thank you so much, June Neri, Chief Economist, BPI.
Welcome.
And that's a first look into the business day. Today is Tuesday, August 10, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are one news.